distribution video this week. So having a look at a couple of things now, I think Ads and I are pretty much in unison as to where we believe Bitcoin is headed. A couple of things that we definitely want to look at on the daily for a very bullish argument for BTC at the minute, something that we haven't seen since, I believe, February last year. So Ads, without further ado, let's get into these charts and see what we're all thinking. And I'd love to hear what you think as well. Please leave your comments and thoughts. BTC is headed. A lot of mixed reviews at the minute, Ads. A lot of causes for the bears and a lot of causes for the bulls. What do we think we're seeing at the minute?
Well, at the moment, we can't deny this Ichimoku on the daily, Ty. It's pretty prevalent and it's pretty bullish in my opinion. What do you think?
Yeah, undoubtedly. We were talking to Crypto Says earlier this week as well for season 2 of the Trade Hacker podcast, and that was something that he pointed out. And one thing that we got to mention now too, for a little bit of time, we've been proponents of the crypto settings, the 20, 60, 120, 30 settings on Ichi. And after talking to Crypto Says, who's an Ichi and Garn pivot expert, he's brought us around a little bit to now the standard settings, which are typically used for Forex markets because they are not 24/7 markets like crypto. Crypto is a little bit more of a conservative setting, and it tends to give you less false signals, I suppose, because we are in a 24/7 market. But so far, using the standard Ichi settings this week, we've had some really good trades come out of it, some really good results. And as we can see there, we've got a bullish Kumo twist. We've got the lag line breaking out of the cloud, as well as the Tenkan breaking out of the cloud, which is a very, very bullish signal now. We're waiting for our conversion, our baseline rather, or our Kijun to break out of the cloud as well, which would just be overall a really, really bullish signal for us. And you can see the shape of that Kumo twist there going green and bullish. It's an upward trending Kumo cloud as opposed to the downward trending one that we had before there in the last green one we had. So at the minute, there's a few arguments as to where we're going. It definitely seems like there's a lot of people bearish, there's a lot of people bullish. So we've got a bit of an equilibrium between apparent supply and demand at the minute. But if we look at our Wyckoff chart there, Ads that we posted on the 13th, where we were expecting this run up, we didn't expect it, I guess, so soon, but 8.7 being our target for this Wyckoff accumulation. Now, I guess I'm in a little bit of a different frame of mind as Ads. I guess I haven't even really asked you, Ads, your thoughts on this accumulation or this alleged accumulation area here. But for me, I definitely think all the signs point to an accumulation, and what we are experiencing now is the markup before we continue upwards. So one thing that Richard Wyckoff was a proponent of, along with his Wyckoff method, was Elliott wave. So the argument could be made now that we've come into this first phase of the markup. What we would expect is a pullback before a continuation of the move up. So what we could potentially be experiencing now too is a little bit of a distribution, which means that we've had this accumulation, we've had a nice little run, we're having a little mini distribution where the whales or the big boys are selling back into the market because there's so many FOMO buys at the minute. We have a little bit of a retrace. We expect potentially down to anywhere between sort of 8.45. I see some people saying 8.2. I'm not quite sure personally that we'll get to 8.2. I'm looking between 8.45 and sort of 8.38 at the minute for a pullback. Yeah. And then we may have another little mini accumulation at that point before the next move up towards potentially that next supply Ads around the 9.693 mark.
Yeah, if we're looking at supply and demand though, we're looking at this area here, which is a short-term block. We've pierced through that in 2 daily candles at the moment, so that zone effectively is null and void. So our trading range moves up to around the 9.2 mark, where we've got this cloud resistance there on the left hand side, and a decent supply zone there. So look, honestly, Ty, I reckon you're right. There is a need for a pullback. And I see where the guys are coming from with the 8.2 mark, because that would be a decent retest of that overall falling wedge or downtrend that we had, if you were to call it that. But I do agree with you, around the 8.4, 8.3 mark would probably be where I would call it. We've got some decent cloud support here on the left-hand side if we're using Ichi exclusively. So yeah, I think anywhere between the 8.4 to even the 8.2 mark, even in that sort of range here.
Yeah, that's right. And even if we look at Steamroller 2 Ads there as well, it's starting to give us a signal that we are into overbought territory. I think if we zoom out, I don't even know the last time that we got a major signal like that was really at the top of that run at 13K. So
Yeah.
we don't put a ton of weight on Steamroller, but certainly when it starts crying at us like that and telling us that something's happening, we're in overbought or oversold conditions, we start listening. So I think the only thing that would push it any higher at the minute would be a FOMO run of late buyers into the market, but we'd need quite a bit of capital, I think, injection to push us up to that 9.3 mark. We had said earlier in the week as well that I think if we got one more little impulse move, 9.3 or the sort of the low nines would be our target for the next short. But with the pullback that we're sort of experiencing now, or I guess the lack of major volume pushing us any higher, I definitely think all signs are sort of pointing to a retrace at the minute.
Yeah, there's a lot of signs of bearish divergence on the RSI v CCI at the moment.
Absolutely, yeah, we've got bearish divergence there, ads if we draw it up on the charts.
Yeah, we've got that. We've got an effective double top on the RSI, which is a bearish divergence, and then you've got the higher high coming off that price action. And if we're looking at supply and demand, if we're really scrutinizing the chart, if we zoom in, you've also got this zone here, all right, because we've got a red candle or a small, basically perfect size zone to draw off where we had our leg up from that price zone, and that lines up with cloud support down here as well. So look, honestly, like I just said, anywhere probably in between, the 4 to the 8.2 range, I think that's healthy for a pullback at the moment.
Yeah, I think I think 8.2 for myself would be the absolute minimum, but definitely my first target is around sort of the 8.4 level. If we go to our Wyckoff article at the top there, adds Unity Trading Group /Wyckoff, the article to the right hand side, you can sort of see the logic behind where things may be moving if we are, or if we have truly just breached out of that accumulation phase. So we can sort of see there we've got an Elliott wave pattern there as well, where we hit to our low volume sell-offs before the jump the creek, and then ultimately up our way towards our buying climax before that distribution phase could potentially kick in. So if we have a look at BTC on the 4-hour ads for the guys trading the smaller timeframes, as swing traders, we are mostly looking at the higher timeframes ourselves, ads and I. So we can sort of see now too, we're teetering in that little range between where you just put your line there, where we are at the minute. So yeah, at the moment, not a great deal going on. Steamroller again telling us that we're due for a pullback. It's just a matter of how far we go now, and will we test that overall downtrend line before a move up. But for the first time in a very long time, I can officially say that I'm quite bullish on BTC.
Yeah, that's a fair assumption to make based on the data that we've seen out of Itchy. So yeah, I tend to agree with that.
Yeah, absolutely. So having a look at a couple of the other majors, one that ended up, we looked at this on Tuesday night with our inner circle guys, and we were thankful that it played out the next day, but was LTC ads, which is now a lot of these are seeing quite severe pullbacks, as you would imagine. It would have been great shorting opportunities had you have caught the top of those wicks. But from now, we've got a bit of a pin bar by the looks of it there, or looking like a couple of pin bars. Definitely due for a retrace on a lot of these alts. In fact, EOS being another one that we were looking at. A lot of our guys were in a short position. I think we ended up being about 20% up on our shorts before we closed. There was just too much activity on a lot of these alts, which was, I didn't really expect to see that when BTC run, to be honest. I would think more people would be pulling out of alts to put into BTC, but no, definitely some really big runs. Dash was another one, I think did 110% in 4 days. For the people saying we're in alt season, I definitely don't think that's the case just yet. But certainly nice to have a little mini alt run as we've seen at the minute. But certainly, I think we're pretty far from alt season.
Oh, look, if it was alt season, we wouldn't
be seeing this. If we ever get there, ads.
Yeah, if it was alt season, we wouldn't be seeing this red at the moment. So, look.
Yeah.
Good thing about EOS, though, you could have had that pretty much squared away with that long, if you were in EOS, with that basically pretty easy supply zone to spot, where you've got a pretty easy to see market pivot point there, and then you're looking at the green and some of the red candle bodies and wicks to draw that zone, and then of course our rejection off that. So it looks like EOS needs to pull back a little bit further as well.
And we'll do a quick scan of a couple of the other majors. Let's have a look at F. See what's going on with F. Obviously, at the minute, after we have such aggressive pullbacks, after such aggressive runs up on these alts. We've got to be very cautious in the way that we play things. So I think if you're looking to FOMO buy any of these alts, I certainly wouldn't be rushing into any buys just as of yet. I think we need to let everything cool off a little bit. We need to see what BTC is doing in the next few days. And keeping in mind, too, that we are approaching the weekend where we typically see a little bit less volume. But in saying that, over the last few weeks or months, indeed, we do see this sporadic one-day candle or 4-hour candle that is a little bit of a liquidity grab where we see these crazy wicks and stuff. So I think we need to be cautious even trading on weekends now, because beforehand it was no action and now we're getting crazy action. So I think for me, a lot of the time weekends are usually a bit of a no trade zone. I like to have a bit of a mental factory reset, and then we see a little bit more liquidity come into the market, or indeed a bit more action on the trades come Monday, Tuesday, our time during the week.
With just going on to Ethereum, we've got a couple of zones that I'm that I'm eyeing off, which are decent pivot levels. This one here being the main one at around the 2100 or 21,000 sat mark with Ethereum on the BTC chart. But the only thing that concerns me is there's long wicks to the upside tie on the daily time frames where we've been pushed up and then we've been basically flat out rejected on this this resistance here on the left. We're not even using... If we're not even using supply and demand, we're just using resistance. We've got a flat out rejection on some of these wicks there. So look, it's a little bit iffy on Ethereum at the moment. If we're drawing Fibonacci from top to bottom, we're going down into the smaller time frames, of course. We've already had our 38 pullback, but I think the 50 is probably in order for Ethereum tie on that one at 18,000.
Yeah, definitely. I think a little bit. You can see how they're definitely Ethereum down from that point there. So that seems like a pretty solid rejection point. I'd be interested to look at F on the day using Itchy if we could ads.
No problem.
And for the guys watching, of course, we don't put all our weight on Itchy. You can see that we've got a trading strategy here. Itchy's just certainly just a part of it.
Just a big part of it, yeah.
And is that the daily settings?
That's daily settings. That's normal Itchy settings as well, not crypto. And you've got that cloud rejection there on the downtrend.
Yeah, I'm just about to put Itchy on myself. Your screen's a little blurry on mine. Yeah, definitely. There's not a whole bunch of information to support too much of a run there on ETH at the moment. We did have a TK cross, which was nice before we had this run up. It was a bullish TK cross, but at this stage, we still got quite a wide cloud, which indicates a little bit of volatility there. And I don't think we're going to see a breach of that cloud or too much of a major run up, at least in the little bit. It was a nice volume injection there on ETH, and we have seen a little bit more of an increased trading volume as of late. But at this stage, pretty clear that we're still in a bit of a downtrend there for ETH.
Absolutely.
At least until we make a higher high or we breach that upper supply that you've got drawn there, it's still very much in a downtrend.
I agree.
All right, let's have one last look at XRP.
XRP BTC. That's still in that channel that we drew on Tuesday night, Ty. So we did identify this falling wedge on the daily. It's a little bit skewed, but it is valid in my opinion. We're ping-ponging and tightening up a little bit. We're still coming towards that demand zone on the left-hand side, and I'll just adjust that size. So there we go. So we're bouncing off that considerably at the moment. Excuse my cough. But I think XRP in the longer term, Ty, I reckon we're going to see some decent runs up with XRP, especially on the BTC chart.
Yeah, well, look at where we are now and how far down we've come with XRP, and around this zone we I guess typically do see some nice little bounces from this demand zone that we're looking at breaching again at the minute. So I'm interested to keep my eyes on XRP and see where it goes as well. Another one that just very quickly that we did chart up that one of our members spotted that has a very similar structure to what XRP is demonstrating there is Matic. Personally, will I be trading Matic? I'm not sure, but interested to keep an eye on it and see how things go. Shout out to Kaz if you're watching here. That was a nice little pickup, but interested to see what happens on this one.
That's a big sell-off, bro.
It is a big sell-off.
We'll have to honestly.
But
There's
look at
not.
where we
Yeah,
bounce from that demand there. I think you might get some impulse moves with coins like Matic due to the low liquidity, but obviously because it's got a few fanboys as well.
yeah. That's a really strong demand zone in my opinion.
The only
Even
thing
though we've
damaging Matic was that that massive dump that we had. So
yeah.
yeah, it's interesting. I think it's worth watching just for the sake that there's some evidence there that we might have a bounce off that strong demand. But will we bounce that high? Absolutely not. But I
Probably not.
certainly, yeah. Typically, when we get strong touches on demand like that, at least the first time, we sometimes see a nice little bounce. XRP was an obvious sign of that going back a little while ago. And even if we draw that demand further towards the left, as you can see, it's quite a strong demand.
Yeah, absolutely. Yeah, there's all the way down on this side here, and that bounce from this one here. Obviously, if we extend this one across that way, and you bought off this level, then you would have got a 60% run out of it. So that's a really strong level of demand support. However, whatever you want to make of it, and there's not a lot to go from on this run up anyway. So yeah, looking okay. It's just the volume's letting it down.
Yeah, absolutely. And one more that I do want to have a look at is will I be trading it? I'm not too sure. But Raven, I'd like to have. That's another one that seems to pump quite well.
Raven
If we look at it
coin.
on the daily, probably more so than the 4 hourly ads,
Mm-hmm.
it almost looks a little bit sort of Doge like, where we seem to get these coordinated pumps or these sporadic pumps that tend to play out within similar timeframes. It's around sort of 37 to 40 days that we see between the bottoms between where we bottom and where we start running up for these major moves. So listen, that's a high risk trade. It's not me saying trade it. It's just me saying take a look at it and pay a little bit of attention, and you might get a nice little bounce out of it and some quick trades.
Yeah, this is supply and demand's my bread and butter for trading. This is what we teach in the inner circle pretty much every week.
Yeah,
But we're basing this off market pivot points. All right, so market came down, pivoted pretty strong upwards. All right, so this level here would be a strong buying opportunity if it ever comes back down. And when it did, it was bounced straight off. Obviously, orders in and on top of the demand, and then having stop losses underneath. All right, so you're protected from these sort of moves here. So you're buying off this, and then you're protected from it going underneath, making a lower low, and then off this, you would have picked up another 64%. And you're doing all this just by identifying a pivot point that happened back here in Feb last year. So very straightforward trading strategy.
yeah.
And
And one other
and
thing
a
that,
good
that
one.
got me there was that quite big green candle that we had as of late. Could that be in a little accumulation for some big boys before a push up? Who
Hmm.
knows? But definitely worth taking a little bit of a look at it at RBN at the moment, in my opinion.
Yeah, just keep it on your radar.
Yeah, but be cautious with it as well. So if you want to learn a little bit more, we did post a couple of articles this week. One of them was the Wyckoff article ads, where we go through and we talk about Wyckoff logic, the composite man, which in my opinion is one of my favorite mentality sort of trading habits that Richard Wyckoff came up with. We talk about the laws of supply and demand, the Wyckoff rules. We talk about accumulation, markup, a brief over market cycles, which relates really well to that interview that we did with Cole Garner on the Trade Hacker podcast last year about the elements and psychological elements of a market cycle. And then we also talk about Wyckoff distribution, and we've got a video down at the bottom there, which we posted of Wyckoff accumulation. And in just a minute, we'll have a video explanation of Wyckoff distribution as well. So if you're a Wyckoff fan, certainly worth having a look at that article at Unity Trading Group /Wyckoff.
Perfect.
Excellent. All right. Well, we're going to be doing this every Thursday night from now on. We do our inner circle group private training on Tuesday nights, but we're doing this every Thursday from now on, anyway, between sort of 7:30 and 8:30. So hop on into our Discord and we'll post a link each week. And yeah, keep us updated. If you have any questions, feel free to leave comments, join us in Discord, and we'll see you next week.
Thank you guys. Catch you later.
Bye-bye.